Let's welcome on board Sudeep Shah as well on the technicals. We've got Mahantesh Sabara joining in on the fundamentals right now. Sudeep, before I come to you, Mahantesh, just a quick word. Do you sense that we are headed in lower? I mean, Kunal is predicting another 500 to 700 point fall on the index.
I think the union budget expectations are getting built up, and that's probably eating onto the market's minds because we have already reached quite a bit of a high in terms of the stock market performance. The entire last calendar year, the returns have been quite superb. The overall market was plus 20, over 20% plus, and you had the small cap, mid cap doing wonderfully well in upwards of 40% and thereabouts. So the weakness was in the minds of the market. That's probably what is happening. And now the union budget expectations are building in.
Wondering, Mahantesh, afternoon, Sudeep, you as well. What exactly are you referring to when you say union budget expectation? Is there a fear of some added tax or some capital market related kind of announcement?
Not really on the added tax or capital markets related announcement, but probably the fiscal consolidation expectations will go for a toss because it's going to be a budget year, and therefore there will be a drain on in terms of expenditure, which could lead to pressure on overall interest rate environment for the entire economy, and that's why you're seeing that some of the banks are actually underperforming.
Sudeep, what about Bank Nifty? If indeed 500, 700 point fall we are talking about on the Nifty, what kind of proportionate damage could happen on Bank Nifty? But before that, are you also on the camp that we could get weaker from here?
Uh, yeah, good afternoon, Ajay. See, what we are seeing is that we can get weaker, but I feel the weakness in Bank Nifty could be approximately up to 46,600, 46,800 on the downside, especially the same zone where Bank Nifty had taken support around on 21st of December. So we might break that zone plus minus 100 points and then start rebounding from there. So there is a pending gap also which was left in the first week of December around 46,600, 46,800. So we feel on the downside in the next couple of days we could fall another 400, 500 points or 600 points in terms of Bank Nifty closer to 46,800 and then start consolidating from there, and then from there we will take the next view. But at least a fall till 47,000, 800, 850 zone is on the cards. That's what we feel. Because in the last few days, if you see, 48,000 call writers, 48,100, 48,200, all these strike prices, despite in the last 2 days, Bank Nifty rebounding from lower levels, they were still holding fort. They had not given up their positions in terms of aggression also. So the call writers were quite active, and with today's fall, what in Bank Nifty has done is that it has even breached firstly the 13-day exponential moving average, which was placed somewhere around 47,800 on the spot, and again the 20-day EMA also, which was placed around 47,500, that also has been compromised just now. So I feel there could be some consolidation and selling pressure at higher levels, which could be visible. And any long positions in Bank Nifty from here on should only be taken if Bank Nifty on spot crosses above 47,700 and it closes above that. Till the time, all rises could be met with selling pressure at higher levels.
Quite interesting. Let's just take stock of what else is happening in the market and what's looking weak. While, of course, like Kunal flagged off, there is ICICI Bank, which has been under pressure today. But look at what's happening to an M&M. That's also down 1.5%. SBI is down 1.5%. And, of course, IT is also buckling under pressure ahead of the earnings this week, that is. But, Mahantesh, you think much of the negatives are already in the price and there is actually scope for outperformance? Should there be an inline performance from any of the IT majors?
Yeah, the IT majors downfall seems to have been overdone right now because all the negatives seems to have been factored in the IT prices. We have had this issue about employees overall employee headcount not growing, weakness in terms of executions, order execution, while the order book is really very strong, and then you have this seasonally weak quarter which is coming in right now. But having said that, the way the IT sector has fallen, suggests that probably much of the negative news are already factored in, and there's nothing much to look forward to in terms of further negative news. If that's the case, there will be a sigh of relief that will come from the markets, and you could potentially find the IT sector actually outperforming the market ahead.
Mahentesh, what are your views on HDFC Bank? Despite a very reasonable kind of a growth on the Q3 update, 5% sequential growth on that base, but the stock is just not responding at current level. Do you see value, or do you see value lower?
I think it's a mixture of events that has caused this underperformance on HDFC Bank overall. Okay, and within that mixture, one cannot wish away what's happening to the banking sector per se. The banking sector is now on a high in terms of credit growth number. The YOY credit growth number is upwards of 16% thereabouts. In fact, the recent tick numbers were closer to 20%. So there's a large base effect that's getting built up, and you cannot expect the banking sector to grow further over this base. So that's probably one dampener. The second dampener I talked about is the budget might indicate again a fiscal deficit which is not controlled like we've had in the recent past due to COVID. There was a reason for the COVID related fiscal deficit being not under control, but now even this year could potentially be not under control. So that could put pressure on interest rates. And as it is, the deposit growth rate for the banking sector is very weak. These events combined with what has happened with HDFC per se, which is the merger process that has brought in situation where they have to cut back on certain avenues of growth that they had. The separate entities would pursue their, that is HDFC Limited and HDFC Bank would pursue their separate course in terms of business growth. But now the HDFC Limited entity being back into the bank puts in more regulatory kind of overhang over the entire business structure for HDFC Bank per se. So I think this is still not over. And then you have a further situation that says that FII or FPI inflows are weakening now or are likely to weaken ahead, at least for the first few months, with the Fed starting to signal rate cuts. That being so, HDFC Bank being a very large bank held by most FPIs would mean that there could be an element of outflow pressure that is coming on. So these confluence of factors is what is causing probably the bank to underperform right now, in my assessment.
Sudeep, what's your reading on the charts of HDFC Bank? Because it's really struggled to actually recover anything, not just last year, but even now.
Aisha, see, if we see HDFC Bank, its daily and weekly chart, see, this stock had been outperformer right from 8th November, I guess from the time it crossed its 20 or 13-day exponential moving average. And from that zone of 1500, it had a one-side rally up to 1700, 1720, and along with Kotak Bank. And this was the time when Axis Bank and ICICI Bank did not perform. And single-handedly, both these stocks, HDFC Bank and Kotak Bank, pulled up Bank Nifty from lower levels. But from in the last 4 or 5 sessions, what we are seeing is that it's just going sideways, and some selling pressure from higher levels is witnessed around 1700 to 1660 right now. But overall, I feel that this zone of 1645, 1650 going forward could act as a strong support. There's a pending gap also which was created on 13th December. And even if you see the options data at the money, put writers are also holding strong. So I feel another day or two, but HDFC Bank could make a temporary bottom somewhere around 1640, 1645. And then we could see consolidation and for post that there could be some rise, because HDFC Bank is kind of, I guess, completing its extreme short-term correction maybe today or tomorrow, and 1640 would be the most crucial number that we should be watching out for.
There are some important flashes coming on your screen from Coal Ministry. These are in line with remember the commentary coming in from Coal Seki himself on our channel just about 3 days back. aims to produce about 183 million ton of coal during 86 and 186.6 in FY25. Mantesh, Coal India has been a terrific performer for the last 1 year. In fact, even on fundamentals, I was reading that they've not only met the entire FY24 production target in the first 8-9 months itself, but they've also hiked their next year production targets. Almost 75% return at 380. Do you see further up-move possibilities here in Coal India?
Why is that the Coal India's production targets are getting exceeded? Is the reason is very clear. We have had weak monsoons. As you would know that when the monsoons are really either normal or excess, Coal India has a difficulty producing coal during the monsoon months because some of their mines get flooded and there is no way they can produce excess coals during that time. Since the monsoons were deficient, we've had a situation where coal production was better than what it was previously. So that's not a surprise. But that also tells you that because of the deficient kind of monsoon, we'll have more thermal power production ahead. And that really, again, augurs really well for Coal India because now they are geared up for the thermal power production ahead. Having said that, there is another news that keeps coming in and going out, and we are not very sure about, is that the ministry wanted some kind of benchmark to be set as far as coal prices are concerned. Probably looked at international benchmarks and tie the prices of coal from India and Coal India particularly to those international benchmarks. If that really happens, then the price volatility that were associated with e-auctions earlier, sometimes which were favorable for Coal India and sometimes not, would probably go away. We are like gonna enter a cycle where power rates per se are likely to be up as we approach the summer months. And that could again come back in the form of coal prices, or there is a headroom that will be available for coal prices to be raised. So all these factors have contributed to the way the stock has performed. Not just Coal India, you would notice that most of the powers related stocks, and NTPC or Tata Power or the likes, have all really done well in the past year or so. And therefore it's the sector's call that one has to take. My belief is now that once the summer season is over and if monsoon predictions are back to normal, we'll probably have some of these stocks derailing.
Okay, Mantesh, great to have you on the show. Thanks as always for taking the time out. In fact, we're going to take a very quick break on that note.